Imagine this. You're watching the market. The chart is flickering. Bitcoin is dropping. And suddenly you realize that one of the largest Bitcoin holders in the world is in free fall. While you're panicking because the price is breaking down, the market is playing a game you don't fully understand yet. But in a moment, you'll feel the mechanics behind it like staring straight into an ocean tsunami. In early February 2026, Bitcoin entered a dramatic sell-off. After trading above $126,000 in October 2025, Bitcoin briefly dropped below $64,000. And even though it managed to climb back above $70,000 at times, the direction is clear. Markets are shaking, volatility is exploding, put options are surging, and the whales know we're standing at a critical crossroads. And just like a beach ball held underwater that desperately wants to pop back up, Bitcoin is still governed by the laws of supply, demand, psychology, and leverage. Now the camera zooms in on MicroStrategy, or rather Strategy, formerly MicroStrategy, the company that has been accumulating Bitcoin for years like a hungry whale. Michael Saylor turned it into the ultimate symbol of institutional Bitcoin hodling, with more than 713,000 Bitcoin sitting on the company's balance sheet. A dark, massive fortress built from data points, leverage, conviction, and risk. But here's the dramatic moment. Their average purchase price sits around $76,052 per Bitcoin. The price they paid is now above the current market price. And on the balance sheet, that means only one thing. They are officially underwater, like a diver stuck at 50 meters, waiting for the moment they can safely rise back to the surface. If Bitcoin stays below $70,000, even for just 12 to 24 hours, this is no longer a normal market correction. This creates pressure, margin risk, financial strain, and potentially the first real threat to Saylor's long-term vision of turning MicroStrategy into the ultimate Bitcoin proxy machine. This level isn't just a price point, it's an emotional turning point in this cycle. We're dealing with multiple layers here. On-chain activity, institutional strategies, trading volume, ETF flows, and derivatives positioning, all interlocking like gears in a massive machine. While you might be thinking, it'll bounce back, professionals are already sitting on the other side of the table, quietly building positions or cutting exposure. Take a closer look. The whales know it. Liquidations are high, futures volume is falling, and yet large players remain firmly in the saddle. Data suggests that large Bitcoin wallets are holding and not selling, even during price declines, just like in previous cycles such as 2017 and 2020. Those periods also saw brutal drawdowns before turning into massive runs. The market remembers these patterns, often better than we do. And this is where the real tension lives. Bitcoin is falling, but long-term players keep accumulating. What does that mean? Historically, in previous cycles, we saw mass capitulation well below key support levels before the market finally reversed. Think back to 2018 after the $19,000 all-time high, or the capitulation bottom in March 2020 when the world panicked. Once capitulation ends, the next expansion phase often begins, and many crypto veterans are already debating whether we're standing at that point now, or if there's more downside ahead. From a macro perspective, things aren't getting easier. Inflation remains stubbornly high across many regions, risk assets are unstable, and despite some institutional inflows into Bitcoin ETFs, flows are stalling or even turning negative. At the same time, corporates like Strategy and other Bitcoin-exposed companies are booking accounting losses. Imagine being a fund manager preparing CFO-level reporting right now. This isn't theory, this is real pressure. The psychological narrative is perfect for tension. While you're panicking, some institutional players are already thinking 3 steps ahead. They understand that many traders are still trapped in short-term price swings, while true accumulators like Saylor are focused on long-term positioning. But here's the twist. If the market stays below critical thresholds for too long, pressure doesn't just build on MSTR. It spreads across the entire spot Bitcoin market. Why? Because MicroStrategy doesn't just hold Bitcoin. It raised capital through equity issuance, debt, and hybrid financing to build this massive Bitcoin position. If those funding channels dry up or the balance sheet weakens, the company could be forced to liquidate positions. Not because it wants to sell, but because it has to. like a diver who's gone too deep and suddenly needs air. That brings us to a critical question in this video. What happens if MSTR needs to come back above water? Could a strategic shift become necessary? We're not talking about a minor adjustment. We're talking about a potential paradigm shift in their Treasury strategy if Bitcoin remains below $70,000 for days or weeks. And this is where the market truly plays a game most people don't see. It's not just Bitcoin's spot price. It's risk premiums, derivatives exposure, ETF flows, option skew, and volatility metrics activating the moment large players begin hedging or unwinding hedges. These forces live beyond simple price charts. They form the core structure of the market itself. You might be asking, if this is so critical, why are some players still buying? The answer is simple but psychologically complex. Scarcity. Bitcoin has a fixed supply of 21 million coins. When large holders refuse to sell, available liquidity shrinks. That creates supply shocks. And scarcity has always been the foundation of every long-term Bitcoin bull run, proven again and again in every previous cycle. Now imagine this. The market does exactly what it always does. It creates fear, uncertainty, and doubt, while at the same time, the largest addresses continue accumulating. It's like a silent storm forming on the horizon. And as you're listening to these words, watching the chart move in real time, understand this, you're now part of a game where not everyone has the same information. The comment section is already heating up. What do you think? Do you believe MSTR can withstand this pressure? Do you think Bitcoin finds support and reverses? Drop your thoughts in the comments, debate with others, share your perspective. At the end of the day, one thing is clear. We are standing at a critical point. MicroStrategy's Bitcoin plan isn't dead, but it's as tense as a tightrope walker in a storm. If Bitcoin stabilizes above $70,000 and volatility fades, this could set up the kind of explosive omega candle that flips the entire market narrative. If not, we could be heading toward a final capitulation with serious consequences for MSTR, its financing structure, and the broader spot Bitcoin market. And this is where today's analysis ends, with a feeling only real market participants recognize. You now see patterns, mechanics, and risks that most people still don't, and you're prepared to view the market from a perspective that goes far beyond simple price charts. If this video gave you new insights, hit like, share it, and let us know in the comments. Does MicroStrategy make it back above water? Or does this storm mark a historic market bottom? I'll see you in the next video.